It's bumped up against 37 a couple times, and it hasn't seemed to be able to break through that barrier yet, not decisively, not stay there. But if it does, I'm not a technical analyst, but if it does, there's nothing to stop it from going north of 40 and probably on to 50, which would be interesting. And 50 sounds like, oh, all-time high. But remember, that's only nominal. I haven't done the math recently, but a real all-time high for silver is triple digits. So I'm not worried about silver getting too pricey or whatever. And I'm actually, the summary here is, as you know, I'm bullish on gold, I'm bullish on copper, and silver has aspects of both, monetary metal, industrial metal. How can I be bullish on both of those and not bullish on silver?
The case for silver's resurgence is being championed by several market analysts and institutional voices on Wall Street, who have argued that a combination of structural and cyclical factors is propelling the metal's rally momentum. The $50 threshold is now increasingly seen as a logical target, with both technical and macroeconomic conditions aligning in silver's favor. The price of silver leapt on Friday in London, bursting through $37 and then $38 per troy ounce to hit new 14-year highs as U.S. President Trump's shock trade tariff on industrial metal copper spurred a scramble to import silver into the world's largest economy. Seasoned investor Lobo Tiggre maintains a bullish outlook on silver, emphasizing that a breakout above $37 could trigger a rapid move towards $50. However, he notes silver's real high is over $100, showing strong long-term value. Regarding the other metals, Tiggre notes rising platinum prices and warns against buying anything silvery without strong fundamentals. While transitioning to the economy, Tiggre admits he wrongly predicted a clear U.S. recession last year, though some sectors weakened. He credits massive deficit spending and ongoing liquidity for propping up the economy. Ultimately, Tiggre states that all paths lead to inflation, reinforcing gold's appeal and, later, silver's. Even with a correction, gold remains far above mining cost assumptions. He stays bullish but wants solid fundamentals before diving in further. When comparing the current gold market performance to previous cycles, particularly the late 1970s rally, the current movement shows similar structural patterns but with significantly stronger fundamental drivers. The 1970s gold bull market saw prices rise from $35 to $850, a 2,328% increase, driven primarily by inflation concerns and the end of the gold standard. Market analysts examining the current supply-demand imbalance, central bank accumulation rates, and the unwinding of derivative positions project a realistic fair value target of approximately $8,000 per ounce. Before we dive into LoboTiggre's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Precious metals are moving. Well, I'll buy anything silvery. Not a good thesis. So where does this leave us? There's talk about, because gold is so high, and I know we'll get there, but because it's so high, Chinese consumers are going with platinum jewelry. I can't confirm that, but I'm not sure how, if that's true, I'm not sure how durable that is, because if you're wearing a pure platinum chain, it looks like, to anybody who's not an expert, it could be silver. Like, nobody would know. Like, so if you're going to show off your bling, platinum, nobody knows. So anyway, that's supposed to be one of the drivers. I don't know how verifiable that is. And fashion is not really something that I invest in. There's also the thesis, and I have heard people at this conference, prominent people at this conference, touch on this thesis of the Russians have been selling their stockpiles to fund their war effort. But if that's true, so if that's true and they've run out, then suddenly, that could see prices going higher, especially because we have seen, as you mentioned, a supply deficit. So how is it that prices haven't been moving despite a supply deficit? And one of the answers has been the Russians are selling excess. And so if that just ran out, prices go up, that makes sense. But South Africa is the bigger platinum producer and Russia is the bigger palladium producer. So if it's because of Russia, I would think that the palladium price would be the one moving more, with platinum catching up. And it's the opposite. Platinum is the big mover here. Of the expensive silvery metals, platinum is the one that's made the biggest move. And that's more of a South Africa story. And South Africa's always got one problem or another, or a dozen problems or another dozen problems. But there's no big blow up in South Africa right now. It's not like, the biggest mines have shut down. Though I did look, and actually the big platinum producers, their latest quarterlies, they're all down significantly, but not because South Africa shut down or something. I think it was more like low prices curing low prices. So anyway, long story short, I do think different things are going on. I think it definitely has my attention. I mean, something moves 50% in a commodity space, I have to pay attention. If this continues, I think that becomes investable. Or if there's a way to verify that, yes, it really is Russian stockpiles, that doesn't get fixed tomorrow. They can't just, suddenly have a new stockpile or something, right? So that becomes investable. This is really interesting to me, and it's something that I'm not willing to just jump in because prices moved. I'm a fundamentalist. I need to understand why this is happening, and therefore why I can believe it will continue to happen. And maybe that's just me. So, dear audience, if you want to go with the got a hunch bet a bunch, maybe you shouldn't wait for a cautious old wolf like me to make up his mind. But something's going on there, and it's quite interesting. And I do think it's different from silver. It's striking to me that silver has, which is the beginning of your question, I'm sorry. It's bumped up against 37 a couple times, and it hasn't seemed to be able to break through that barrier yet, not decisively, not stay there. But if it does, I'm not a technical analyst, but if it does, there's nothing to stop it from going north of 40 and probably on to 50, which would be interesting. And 50 sounds like, all-time high, but remember, that's only nominal. I haven't done the math recently, but a real all-time high for silver is triple digits. So I'm not worried about silver getting too pricey or whatever. And the summary here is, as you know, I'm bullish on gold, and I'm bullish on copper, and silver has aspects of both, monetary metal, industrial metal. How can I be bullish on both of those and not bullish on silver? Of course I'm bullish on silver. But since it does have its industrial side, for the same reason that I'm not just going all in on copper yet, I'm not feeling in a rush to buy silver stocks. If I find something that's a compelling value proposition that is not in a basket case country, sure. But I'm not going to buy something in a basket case country because, suddenly silver is going to go nuts or something. There's a lot of ways to get hurt doing that. I think we did have rolling recession, or we certainly had recessions in various parts of the economy, but nothing that the NBER has yet recognized as a recession. It's still possible that they'll go back and retroactively do that. But still, my call wasn't just, weak economy. My call was specifically undeniable recession, and that was wrong. I think, like others, I underestimated the impact, like I was aware of, but I underestimated the impact of all the money printing, what Lynn Alden calls fiscal dominance, or Michael Howell with his global liquidity. Like, these things are out there, they're huge. And basically, my thesis at the time was that we'd have to see the recession and then the money helicopters would go out again. What I didn't realize, that Lynn did, to give her credit, the money helicopters never landed. We had, at least in the U.S., $1 trillion plus deficits the whole time, wartime levels of deficit spending, even though we had the greatest economy ever, according to the last administration, according to the new administration. Now we have the greatest economy ever, but we still need to have wartime levels of deficit spending. So this is highly inflationary. It's directly relevant to gold as a monetary metal, silver as well, but gold is more recognized. Jeff Gundlach, the bond king, famously or infamously recently joked about gold not being something for lunatic survivalists anymore. It's become a real asset, he said. Now, he was poking fun at himself because he's been long gold for years, so he wasn't insulting anybody there, I don't think, on purpose. But that's happening, right? So you see not just the occasional guest on Bloomberg or Yahoo Finance say, we're hedging our portfolio with a bit of gold too. Like, the hosts are even saying, what are you doing in this environment? Gold? Like, it's one of the first things that comes up. It's really becoming recognized as, and heck, Basel III, gold is a tier 1 asset now that banks can put on their books and get recognized for that, not silver. Again, I'm not an economist. I'm just a due diligence guy. But in this context, it seems to me, all paths lead to inflation. This has to be good for real money, monetary metals, especially gold. It's the most recognized one. Ultimately, it should be good for both. But I can see it happening for gold first, which is no surprise to a longtime silver bull, right? Gold moves first and then silver catches up later, right? I'm not saying anything new. Well, I guess the crux of the question now, though, is, has gold gone too far? Is it time for some correction? It is actually, as we speak, correcting somewhat. We're certainly down from 3,500 to under 33 last I saw. And my answer to that is, don't forget the money helicopters. They're still there. I doubt we would see a really big correction. I mean, it's interesting to think, gold could drop $1,000 an ounce and it would still be 2,300, which is a higher price than all the gold mines in the world operating today were built assuming. Right? The mines out there today, they were built, Barrick back in the day, they were modeling on 1,200, and I think they upped it a bit. But a couple of years ago, assuming $2,000 gold would have been extremely an aggressive price assumption. That's $1,300 below where we are right now.
In the interview, Lobo Tiggre points out that $3,500 in gold is a nominal high. It's also close to the 1980 peak when adjusted for CPI, which Wall Street still watches. Despite global risks easing, gold is holding strong above $3,000, a bullish sign for the sector. The price of gold increased 25% in 2025 through to 8th July, with global instability causing gold prices to increase as investors flock towards the safe haven metal. Furthermore, Tiggre cautions against underestimating the Trump shock, highlighting the massive tariff on copper as a disruptive policy shift. He stresses that this isn't about politics. Major changes like these inevitably bring volatility. Tiggre mentions Trump's 50% copper tariff isn't official yet and questions its logic, as the U.S. imports half its copper. New supply can't be created overnight, so costs will likely rise for Americans. The tariff announcement has driven the premium between U.S. copper futures and London Metal Exchange LME prices to a record 25%, as foreign benchmarks weakened and U.S. prices surged. American manufacturers remain highly dependent on copper imports, which make up about half of domestic demand. Trump says boosting U.S. copper production should be a priority for national security, and that the tariff due to take effect August 1st will stimulate growth. Let's get back to the interview.
If you think about it, 3,500, most of our audience doesn't really believe in CPI, CPI, whatever you want to call it, right? But still, it's the number we have. And if you adjust gold for CPI, 3,500 is actually very close to the 1980 peak. So we keep talking about, it's only a nominal high, right? Well, actually, if gold bounced off a real high, at least adjusted for CPI, that's significant. And we might not believe in CPI, but Wall Street does, and comics traders do, right? So I think I don't think it's unreasonable for people, as bullish as they may be in gold, or people who understand that gold really is money, right? And fiat is a fantasy. Even in that case, seeing it bounce off a real high is significant. So I think it's not unreasonable to ask these questions, how low could it go? And that's why I'm saying it can happen. But I really don't think we've got a lot of downside. Things that would have been bad for gold in previous years, we've had several of them this year. I mean, heck, the 12-day war ending, right? Oh, we have peace now. That would have whacked gold a lot harder in past cycles. And here we are still, 3,300. I don't want to be Theoden at Helm's Deep saying, is that all you got, Saruman? Because bad things happened after he said that. But it's impressive how these things happen and the walls are still holding at, well above 3,000, which again, it's a phenomenal price for the actual business of gold mining and exploration and development, which is what we speculate on. Trump fans hate me for saying this, but I'm not being anti-Trump when I tell you, dear audience, don't underestimate Trump shock. Don't assume the worst of it is behind us. We thought peak tariff was April 2nd, but just now we've got 50% tariffs on copper. This is huge. This isn't, some oddball metal that could be worked around. It's Dr. Copper. It goes in everything. It is clearly a mistake. And I think the broader markets have been far too sanguine about the Trump agenda. And I do think the money helicopters are part of that. There's just so much liquidity there that the market responds more to good news than to bad news, which is bullish for gold. But anyway, the point, though, is that we're not done with Trump shock. And when I say that, I'm not saying Trump is evil or I hate his agenda. It's neutral to the agenda. Even if I completely agreed with everything Trump was doing, I would say, and I am saying, that what he's doing is a major change, and that can't be painless. So as an investor, as a speculator, you can make volatility your friend or you can let it steamroll you, but don't underestimate it. How official is it? He has said so. He hasn't signed the executive order yet. It was something that came out in one of his gaggle meetings, supposedly a cabinet meeting, but really a presentation to the public. And he said 50% tariffs on copper. Exactly what and why? It's kind of gobsmacking because the U.S. imports something like 50% of the copper it needs. he can put all the tariffs he wants on it, and that's not going to make a single pound come out of the ground more tomorrow than today. The mines just aren't there. Now, the help he's provided with permitting, that is highly relevant, and it has already helped. But that's still, okay, you get the permits, and then you have to build the mine, right? So it'll be years before this incentive creates more U.S. production, if it does. Meanwhile, it's Dr. Copper. It goes in everything. So we've got U.S. consumers, manufacturers, everybody's going to have this added cost. So it's, why do this? Like it's not like China or Russia is where we get our copper from. I mean, are the Chileans really ripping us off that much that we have to, fight back against these evil Chileans? I don't know. I suspect that in this case, it might actually be revenue because copper goes in everything. And if you're going to say no taxes on tips and no taxes on overtime and all this other stuff, well, it's like, why do we tax gasoline? Because everybody has to put it in their car. Well, until recently, everybody didn't, right? So copper goes in everything. It's almost, ironically, perhaps a bit like a VAT tax because it goes into all these things. So you could raise a lot of revenue if that's the goal, if it's really about revenue. As we speak, the spread between New York COMEX copper, which has just hit another all-time high, just jumped, overnight, and London copper, it's like one of these giant alligator jaw charts. So if you bet on copper in the copper price, as we call it in the U.S., then you're winning big, and copper stocks have moved. But beware that copper, as you and I speak, is cheaper now in London than it was a year ago, even after this big announcement. So this is a classic alligator jaw chart. And the problem with an alligator jaw as an investor is if you stick your hand in there, you don't know if it's going to snap shut because the bottom jaw comes up or the top jaw comes down. Not trying to rain on the parade. I am a long-term copper bull. This aspect of Trump shock is hard to invest on. You don't know how that alligator jaw is going to go. And if you just think, it's a tariff. Americans are going to pay more for copper, but copper is a globally fungible commodity. It's like oil. It's like the sanctions don't work on Russian oil or Iranian oil because it just flows around. Copper can do that too. So it is incorrect to think, copper tariff, therefore copper's up and all copper stocks have to go up. If you're a copper miner in Chile selling to China, then the U.S. tariff has no direct bearing on your business whatsoever. If anything, it's possible that if these tariffs stick at this level, Trump might have just made copper a lot cheaper for China and India and anybody else, because that copper that's not going to the U.S. is going to go somewhere else. Yeah. They're not going to put it back in the ground.
With rising demand, tight supply, and new age investor appeal, the silver story is only just beginning. While reaching $100 per ounce is a possibility for silver, it's not expected in the immediate future and would require significant market shifts. With inflationary forces intensifying, are you positioned to benefit from the next major leg up in gold and silver? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.